Hey everyone, Apple, Microsoft, Alphabet, Nvidia have all surpassed that coveted $1 trillion market capitalization milestone. In fact, Apple has passed the $3 trillion market cap milestone, and Microsoft is approaching the 3 trillion market cap with a market cap of 2.8 trillion. In this video, I'm going to bring you one growth stock that could approach those four and surpass that 1 trillion market cap milestone. In fact, I think it's inevitable that this growth stock is going to surpass that 1 trillion market capitalization milestone. So without further ado, let's see what this growth stock is and why I think it's got room to grow its valuation.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, you can see here in the purple, Apple with the 3 trillion market cap, Microsoft 2.796 trillion market cap, Alphabet 1.768 trillion market cap, Nvidia after a phenomenal year in 2023 and for the last several years for that matter, approached 1.223 trillion market cap. And the one I think is going to pass 1 trillion soon is Meta Platforms with a market cap of $921 billion, $79 billion away from that coveted milestone. So let's look at some of the reasons why I think it's inevitable that Meta will pass this 1 trillion market cap. So for one, the company's done an excellent job in adding daily active users or users of the platform. Family daily active people 3.14 billion as of September of 2023. That's an increase of 7% year over year. So despite the fact that they have this many users, they still added nearly 200 million daily active users in a year. So you might think, well, everybody that wants an account on Facebook or Instagram or WhatsApp probably already has one. Well, according to these statistics, that's not true. They added an incremental 200 million people to their apps in the last year. That's excellent. That's all good news for Meta Platforms investors because these are the people that create content that keeps everyone else engaged. And the more time you spend on one of their platforms, the more advertisements they can show and the more revenue they can generate. Speaking of revenue, Meta Platforms increased revenue by 23% in the last quarter to 34 billion, up from 27.7 billion, and that created a surge in operating income to 13.7 billion, up by 143% from 5.66 billion. The company took a massive cost-cutting campaign and it's starting to pay off. I mentioned earlier advertisements. That's how the company makes money. In the third quarter, ad impressions delivered across the family of ads increased by 31%, and the average price per ad decreased only 6%. Remember, Meta Platforms can choose how many advertisements to show people on the platform. If it wants to make more money, it can increase the number of advertisements it shows. Of course, that would annoy some users, but it can do it if it wants to. And then if it sees that it's having a detrimental impact, it can pull back. But this is entirely up to Meta's control. It can balance the user experience with advertising to optimize performance, to optimize profitability. So it can toggle that up and down. Of course, if it's adding millions and millions of daily active users, it can increase the number of advertisements it shows without decreasing the user experience because now there's more people to show ads to. And the more people on the platform, it's likely to increase engagement on the platform. Meta Platforms benefits from the tremendous network effects that it's created by having so many people on its apps. People come to expect that everyone they know is going to have an account on Meta or on Instagram or on WhatsApp or one of the company's family of apps. I mentioned that it took a massive cost-cutting campaign, 24% employee headcount reduction They now have 66,185 as of September 30th. That's a big cut. Remember, Meta Platforms employees earn higher wages on average. These aren't your low wage employees that you typically find, maybe, let's say, for a company like Walmart, but for Meta Platforms, these are majority high wage earning individuals. I wouldn't be surprised if the average wage is over six figures at Meta Platforms. So a head count of this magnitude is having meaningful positive effects on Meta's profitability that I highlighted earlier. Longer term, Meta has generated strong profit margin, 29% in the most recent trailing 12 months. That's ticking higher after a downtrend in late 2021 and all of 2022. That's why the company did those massive cost cuts, is because it was seeing its profit margin decrease. But now it looks like it's back on the uptrend, and I wouldn't be surprised if this continues to move higher. In fact, analysts are expecting Meta to increase revenue by 13.1% in 2024 and to increase earnings per share by 21%, and then increase revenue by 12% in 2025 and increase earnings per share by 16.5% in 2025. So the company is expected to continue this solid earnings growth, although not as strongly as it did this year. 2023, they're expected to grow earnings per share by a whopping 67% for the year. That's incredible growth. Investors should not expect Meta Platforms to do that sustainably for the long term, although there may be moments where it does have those kinds of explosions in profitability. Longer term, a growth rate in the mid single digits earnings per share is more realistic to expect. Still, the company generates 52% in cash flow from operations from sales. That means for every dollar of sales they make, 52 cents turns into cash flow. That's a very good margin to have in terms of converting sales into cash flow. And you can understand why. The business model is incredibly lucrative. People go onto Meta Platforms and post pictures and comment and engage and hit the like button and all of that stuff. And all of that creates more engagement. And then Meta Platforms shows advertisements and generates money from user interactions. Meta is not really paying for those interactions, right? It's very low cost data content that's being created for Meta, and it's benefiting from that. And that difference between what it costs Meta for that content and what it charges marketers to show advertisement, there's a wide spread there, and that's demonstrated in its cash flow from operations to sales. The next thing I want to talk about is the average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. That being said, you can see Meta Platforms is actually doing the opposite. It's decreasing its shares outstanding by buying back its stock, decreasing from around 3 billion shares outstanding in 2018 all the way down to 2.6 billion shares outstanding as of the most recent update. And finally, Meta Platform stock is still not expensive. It's trading at a forward price to earnings of 20.61. While you were able to buy that stock cheaper in January of 2023, this stock was trading at a forward price to earnings closer to 10. In fact, I recommended Meta Platform stock as one of my top stocks to buy in 2023. So if you saw that video and you bought Meta Platform stock, you would have gained about 200% on that recommendation. But still, even after those gains, I don't think Meta Platforms is too expensive at a forward PE of 20.61. So for all of these reasons that I've talked about in this video, I think it's inevitable that Meta Platforms will join the others in the coveted $1 trillion market cap milestone. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.